Okay, good afternoon and welcome back everyone to the third session of today's Wheel Strategy Master Course. My name is Tony Zhang. I'm the Chief Strategy Officer here at OptionsPlay, and I'm here to talk about managing a wheel strategy portfolio. Up until now, you've had a fantastic introduction to option selling and why the environment that we're currently in is suitable for option selling. Prakash has walked you through the mechanics of a wheel strategy, which is the combination of selling a cash secured put to purchase stocks at a discount and then generate income on those stocks that you now own for capital appreciation, but also generating a consistent income stream while you wait for that capital appreciation. Now, what we typically do when we teach the wheel session is we kind of cram in at the very end the process for managing a portfolio. But today, what I want to do is spend a lot more time doing a much more deeper dive into what are the best practices for managing your wheel strategy portfolio, specifically the cash secured put and the covered call side, and the tools that you have at your disposal here at OptionsPlay to help automate that as much as possible. So let's go ahead and get started. Before we do, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that I will be using as educational examples during today's session. So I'll be covering a wide variety of topics. The first thing we'll do is we'll talk a little bit about options assignment. What does it mean? Where do you get assigned and what to look out for? Because when you're selling an option, you always are at risk of assignment. It's important to understand how assignment works. Then we'll talk a little bit about, or at least I'll introduce you to OptionsPlay's portfolio tracking, how you can enter positions so that we can show you how to manage these positions using our portfolio tool. I'll talk a little bit about rolling your options. I tend to get a lot of questions about what rolling your options mean. We'll talk about that. And then I'll go through the best practices for the short put management and then the best practices for the cover call management. So we'll do those two separately. And I'm going to show you the different portfolio alerts that automate what you're going to learn during these two steps of managing your cash secured put and the cover calls. And lastly, we'll talk a little bit about position sizing and scaling for these types of strategies. The primary thing that I want you to be able to walk away from today's session is a clear understanding as to what are the best practices to managing a wheel strategy portfolio efficiently. And the key word here being efficiently, because it's one thing to understand the mechanics and say that I know the rules. It's a whole nother thing to actually go about doing it actively in your portfolio in a timely manner. Those two things are very important. So today I'm going to tackle both. What are those best practices and how can you access tools to help you do it efficiently and automatically as much as possible? So let's talk a little bit about the assignment process first, because this is really where I tend to find some investors have a misconception as to how the assignment process works. So remember, you are an option seller. And as an option seller, you have the obligation to exercise the terms of the contract if the buyer chooses to exercise the terms of your options contract. So basically, an options buyer who's sitting in their house will submit their order to exercise their call or put to their broker. Their broker then sends that notification to the OCC. This can happen at any time up until the expiration date of your options at 5:30 p.m. after the close on Friday. So remember, and I'll talk a little bit about that. The exercise notice just has to get in by 5:30 p.m. Markets close at 4, which means you still have an hour and a half gap in between the closing time and which time someone needs to send in their notice to exercise their orders, exercise their options. Once those exercise notices come in, the OCC assigns the exercise notice to a broker. Now, this is a completely random process as to which broker gets the assignment for an option. And then it's up to your broker to then assign it to an individual or a specific position of someone who has a short position and has remained open in that short position at expiration. So that is you sitting here on the other side of the table, short option writers. When you're selling a cash secured put or a cover call, you are a short option writer. And if you hold the option contract to expiration through expiration, you are going to be potentially on the other side of the assignment process. So it's important to understand how this works, and it's important to understand that it is, in theory, a completely random process. Now, let's talk about practical application, right? Let's talk about stock ABC. Let's say it's currently closing at 105. This is the settlement price or the closing price on Friday afternoon at 4 p.m. And what I'm going to show you is three different scenarios, three possible call options that you might be short going into that options expiration, and what you can expect at options expiration. So let's say you sold a $100 call option. So you sold the call option, the stock is now well above your strike price at $105. What happens at expiration? There's two things that you can do on your end. One, you can choose to close the position, buy to close this contract for $5, because the intrinsic value of the option at expiration is the difference between the strike price and the stock price, and if that's $5, that's going to be the cost for you to buy to close and remove your obligation before the expiration date. Now, we're going to talk about why you might want to remove that obligation before expiration, and what are some of the risks if you maintain that obligation, or if you simply want your stock to get called away, such as in the wheel strategy. Perhaps you might want to simply just allow it for assignment. We'll talk about when you might want to use this and when you might want to have your stock called away. Now, if you do nothing, your firm will likely close your options trade for you. Especially sometimes if you don't have the capital. Let's say you're short a naked call, you don't have the capital to short 100 shares. Your brokerage firm may close out this position for you. This is something to be really to know that your firm has the right to close out an options position on your behalf on expiration date, especially if they are concerned whether or not you have enough margin or cash to settle the transaction. If they believe that something is going to be in the money and you're going to be exercised, even if you are just at risk of exercise, your brokerage firm still has the right to close out your position. Sometimes not all investors know that, and sometimes you get a surprise on Friday afternoon where you think you have an open position. Next thing you know, your position's been closed by your broker. These are the reasons as to why brokers have risk because if you don't have enough capital, they have to cover that. So they will always cover their risk by closing out your positions before expiration. Now, let's say you have a $105 call option at expiration. The stock's at 105. This is really where you have two choices as well. Very similar to the first one. You will still have the option to potentially buy to close this option to remove your obligation. And we'll talk about why that might be something you might want to do, but it's going to cost you substantially less. It might cost you just a few pennies to do so, or you are going to risk assignment. We'll talk about why you are still going to be at risk of assignment, even if the stock closes at the strike price that you sold. It's really because while it is not necessarily advantageous to the buyer to exercise that call option, but perhaps they simply want to own the stock. And for them, it doesn't matter whether they buy the stock at 105 or they exercise their stock. They have the resulting same position, or they believe something's going to happen after hours and they want the opportunity to buy the stock at 105 rather than what could be a higher price after hours. Now, again, because of the risk that you might get assigned, if your broker feels that you don't have enough capital to take on that assignment, they have the right to close out your position, again, prior to expiration. Typically, this happens a few hours on Friday afternoon if they feel that you are in a position that you're going to be at risk of assignment, but you don't have the capital to satisfy that. And the third example, if the stock rises to 110 let's say you sold a 110 strike price when the stock closes at 105, this is really where both you and your brokerage firm, in theory, should just simply allow this contract to expire worthless. It's not worth the transaction cost to buy it back. you're at relatively low risk of assignment, and this is really where both you and your broker will effectively let this call option expire worthless. So those are the general scenarios that you'll come across assignment. Now, this works the same way for puts, just obviously if the stock is in the money for puts, it's below the strike price versus above the strike price for put options. But the assignment process works the same for cash secured puts and cover calls from this perspective. Does that make sense, everyone? Please type 1 into the chat window if that makes sense to you. Now, these are just mechanics. These are just mechanics so that you understand how the assignment process works. Now, I'll dive into kind of more of the practical elements of managing a cash secured put and a cover call, but I just want to make sure everyone understood this. Perfect. So before I kind of dive into those mechanics of managing, or rather the practical elements of managing a cover call, a cash secured put, I do want to introduce you to the OptionsPlay portfolio tool and why you should consider entering your positions. Because if you enter your positions, it's going to make everything that I'm going to teach you over the next 30 minutes or so much easier to understand and grasp and also manage. So the OptionsPlay portfolio tool allows you to manage your wheel strategy positions across multiple portfolios in a single view. So if let's say you have a Schwab account and a TD account and an E-Trade account, and you have multiple positions in each one, you don't have to log into 3 different places to necessarily see where your positions are. If you enter your positions in the OptionsPlay portfolio, you can see them all in aggregate in one place. And it also allows us to provide alerts to you on income opportunities for stock positions that you have and customize them based on your income settings. So this also helps you get into the wheel strategy as well. It's not just for managing a wheel strategy. And the most important part is that we'll alert you when there's an early assignment risk, when there's opportunities to take profits early, and automate the roll strategies on your portfolio. So whether you're rolling a short put or you're rolling a cover call, automating this process and alerting you when there's risk to you is really important. So it's important to understand how the OptionsPlay portfolio works. So what I'll do is I'll actually take 2 minutes and show you the OptionsPlay portfolio tool, what I think you should be doing before you embark on utilizing the wheel strategy, or if you're currently already utilizing the wheel strategy, how you want to enter your positions into the portfolio tool so that you can track these much, much easier. So when you click on the portfolio tool, first thing you can do is you can click on manage and add a specific portfolio if you want just for the wheel strategy, or you can create one for your TD account, one for your E-Trade account, one for your Schwab account, and you can access all the accounts in a single view. But right now I'm looking at this wheel strategy portfolio that I've created. I also have other portfolios right now, which I've disabled. Just for today's purpose, I'm only going to look at the wheel strategy portfolio. And as you can see here in the wheel strategy portfolio, I have stock positions, I have cover call positions, I have short put positions, and what you see are a bunch of alerts. And I'll walk you through what all those alerts are. But in order to see those alerts first, you have to enter your position. So I'm going to show you how to enter these positions. So generally speaking, as you talk about cash secured puts, we're talking about positions that you currently, either a short put position that you have. So let's say you have a short put position here in Bank of America. What you can do is you can load up the OptionsPlay tool, find the put option that you've sold. So whether you want to just use the modify button and change it to the put option that you sold. Let's say you sold the December, let's call it a 35 strike on Bank of America. So what you can do is you can click on the trade button, enter the premium that the trade was executed in. So let's say, or let's say you sold multiple contracts. Let's say you sold 5 contracts of the December $35 puts in Bank of America. And when you click on the trade button, you can enter the premium that you collected. Let's say you executed this trade a few days ago and you collected $1 on these. You can enter the premium that you've collected, select the portfolio that it belongs in. So if it's in your Fidelity account, if it's in your wheel strategy portfolio, you can put it into the appropriate portfolio and simply click on add position. And what it's going to do is it's going to show up now in your portfolio. Especially under the wheel strategy portfolio that I'm looking at right now, you'll now see my Bank of America short 5 puts, the 5 $35 puts, and my cost basis on it was $1. It's now trading at 54 cents. So I'm up 46% on these short puts. So we've made this tool to help you enter your positions as simple as possible. You can do it for stock positions. So let's say you bought 100 shares of United Airlines, or rather, let me use a different stock because I think I might already have a position here in United Airlines. Let me use, let's say Etsy. Let's say I bought 100 shares of Etsy, and this is a stock that I want to now use as a cover call. I can simply click on the trade button. I can enter the premium that I paid for this. Let's say I paid $105 a share for this position. I'll put it into my wheel strategy portfolio, and I will add this position. So you can do it for your cover call positions. You can do it for your short put positions, or you can do it for your stock positions. All of it will end up showing up in your portfolio. Okay, so the position entry is done through the trading tab. We try to make it as easy as possible. Whatever strategy you're looking at using the analysis tab, you just click on the trade button, you enter the premium that you were executed at, select the portfolio, and enter the position into your portfolio. Does that make sense, everyone? Please type 2 into the chat window if that makes sense to you. And if this is a new feature to you, try it out. You'll find that it's pretty easy to enter positions. We've built this in a way to try to make it as easy as possible. We are working on automation here next. So for now, you're entering your positions manually, and we'll show you how, once you've entered your positions, how to manage these positions and the different alerts that we've created to try to automate it as much as possible for you.
Thank you for watching this intro. We're thrilled to introduce you a brand new Wheel Strategy Masterclass, where you'll learn how to add monthly income to your investments and purchase stocks and ETFs that you're interested in at a discount. To sign up, click on the link in the description below. Also, to make this even more exciting, we're giving away this course for free for one of our subscribers. Simply comment below with "Teach me the wheel." Don't miss this chance to transform your investment strategy and start earning consistent income in your portfolio with the Wheel Strategy. Comment below and have a great trading day.